everyone, you're watching Money 9. I'm Sakshi Batra and this is Market Meter, a show where we get you all the updates of markets and how the action is buzzing at halftime, and also give you an update of how the markets have performed in the first half. We'll also get you fundamental views from our experts on this show who help you understand how to approach the markets from here on, and also give you some sectoral picks where you can keep your focus on as well. Today we are joined by a very special guest. We have with us Kranti Batini, who's the director at Equity Strategy, WeathMills Securities. Thank you very much for joining in, sir. It's a pleasure to have you with us.
Thank you, Sakshi. Thanks for inviting me for your show.
Absolutely, it's our pleasure too. First up, I want to begin by understanding your market outlook at a moment where 3 consecutive days of declines is what we are already witnessing in the markets. We are approaching the big budget day too, and we are seeing about a 500-point kind of a loss on the benchmark Sensex today. So how are you seeing the markets perform over the next few days?
Sakshi, definitely this market, investors are advised to buy on every dips, and as the markets are hovering around nearer to the level of 50,000 levels, after touching 50,000 levels of Sensex, market is witnessed some kind of profit booking. Of course, it happens since we witnessed a tremendous rally in the markets. It's a general tendency of the market tend to witness some kind of profit booking. Definitely it's a good consolidation is happening in the market, and our advice to the investors is use this kind of consolidation to cherry pick stocks which have a lot of margin of safety at these levels. Go with a stock specific action and try to use every dip in the market to enter into the market to participate in India's growth story in a staggered manner.
All right, so the dips can still be used by all the investors who are looking out for opportunities to get into select stocks which have great fundamentals and also have a margin of safety as well. But sir, how are you approaching the budget this time? Do you have huge expectations, or are you saying, or do you believe that the markets may just do a knee-jerk reaction and then come back to normalcy on its high growth path again?
Yeah, from the initial commentary that received from the Ministry of Finance and the finance ministers, of course, there tend to be a lot of expectations around the budget. We are also waiting for the kind of what kind of budgetary spends that's going to happen in this budget from this budget. And also, one thing we need to keep in mind is after the introduction of GST, most of the indirect taxes have been moved to the GST Council. So slowly off late the budget, of course for stock market it's a big day, but slowly off late the budget is becoming a non-event for the market. Of course there will be always expectations around the budget, how the government infra spending and also the new reforms that's going to take place from this budget, we need to wait and watch. Definitely there is a lot of expectation from the budget, and we are going to see market responding to the budget.
Okay, and which are some of the sectors that you're really bullish on, some of the themes that you're working around the budget that investors can pick from your guidance?
Investors can, if you go by the sector specific action is concerned, auto sector is going to get benefited, or some kind of incentives auto sectors may get from this budget. And also one of the sector due to the pandemic COVID-19, the most suffered sectors, if you see the hospitality industry, travel and tourism, these industries sectors are suffered a lot, and they're trying to come on their feet. So this sector is going to waiting for some kind of incentives from this budget. And also with respect to the infrastructure sector is concerned, there are a lot of expectations from this budget with respect to infrastructure sector is concerned. And also what we witnessed is the infrastructure, especially, they have not participated in the ongoing rally. Yeah. So if any kind of incentives that comes from this budget, from the finance minister's speech, get ready for the infra stocks, how they are going to move in the coming days.
Okay, so interest space is something that all the investors can watch out for. Huge expectations from the government to give huge incentives or announcements for the infrastructure sector and also to boost demand as a whole as well. But going forward, if you could share with us some of the stock recommendations that you really have around the budget where investors can keep an eye on.
Sakshi, with respect to the stock specifics are concerned, you need to look forward for the stocks which have a margin of safety. And especially in these markets, when the indices are hovering around all-time high levels, margin of safety for investors are extremely important. And also, this is the market investor one need to identify stocks with solid fundamentals and try to accumulate over a period of time at every dip to create a portfolio and to create wealth in the days to come. We have received the guidance and the forecast from the International Monetary Fund in the coming years. Our GDP is going to hit 2 digits, which is the whole set of sectors and stocks are going to benefit from these kind of forecasts, especially the financial sector, which is the center of the economy. It's going to benefit from these kind of positive forecasts that are coming.
What would be your stock recommendation for the investors?
With respect to our stock recommendation concern, we are advocating investors to buy at every dip a company by name Piramal Enterprises, which have a natural hedge in its portfolio of the business. 50% of revenues comes from pharma and 50% of the revenues comes from the NBFC space. As the economy is turning towards positivity and the growth is coming back into the economy, their financial sector that's going to do well in the days to come, and the company have an inherent hedge in their business model, that is pharmaceutical business. So the stock can deliver nearly 25% returns in next 1 year, and this is the stock one can accumulate at every dip to create a portfolio to their wealth creation is concerned. And the other thing is the quality of management is completely one of the best rated quality company management with respect of the management, and also they have a very good track record turning the businesses into cash rich businesses. So we are educating the investors to start entering into Piramal Enterprises at these levels. And if market gives an opportunity to for another consolidation or any kind of dip in the stock, it is advisable to investors to accumulate the stock further.
Enterprises, a buy stock for you, potential upside of 25% for the next 1 year. You can look at buying the stock at the current levels. Which are some of the other stocks that you would recommend?
The other stock we are educating investors at this point of time is Hemisphere Properties, which is a demerged entity, and the stock, with respect to the stock valuations are concerned, currently the market cap is hovering around between 2,000 to 2,500 crores. The best part of this Hemisphere Property is the company have a land bank of around 750 crores, which can be monetized over a period of time, and how the company is going to execute and monetize their land bank gives a potential upside to this company. The stock performed very well in last 3 months. It moved from a range of 80 rupees to currently trading at 130 levels. But still the stock have very good potential and margin of safety is high in this company. As the company going to execute their projects, monetize their land bank, the company can deliver very superior returns over a period of time. So we educate every investors to enter in the stock at every dip, and at the current level also, the company can give a good return of potential return of 25% in next couple of quarters.
Okay, so all the investors looking for long-term opportunities, Hemisphere Properties could be one pick where you can buy on dips and keep on adding to your portfolio for supreme returns that, are also expected going forward, at least in the next couple of quarters. The last stock from your portfolio, if you could recommend for all our investors before I let you go.
See, we have the third stock for the day for the investors to invest is, it is a cyber security stock, as we are all working from home, and also due to the pandemic, the new culture we got habituated is working from home culture. So there are PC sales and the laptop sales going to go up. And first and foremost thing one need to have after we purchase any kind of device is the cyber security is very important. So we have one company in India which is into cyber security listed space. It's a zero debt company, Quick Heal Technologies. This stock can be educated for the investors who have a investment horizon for more than a year. This stock offers a very good margin of safety. Company is debt free, and as the economy coming back on its track, PC sales going to go up, and the company with the cash reserves they have, they are increasing their capacities, increasing their capabilities in the space of cyber security. So Quick Heal Technologies offers a very good margin of safety to the investors, and also very good potential upside in the coming quarters.
Okay, so three stocks from Sir's portfolio is what you've got: Piramal Enterprises, Hemisphere Properties, and also Quick Heal Technologies from the digital space to bet on these kind of themes for the couple of quarters and get up to 25% of potential return. Thanks very much for joining us, but stay with us till I do a market update. Let's quickly get you what is the update from the primary market space and from the markets at halftime as well. So coming up on your screens first would be the market update. If you see, the markets have actually slipped further from the time in the morning. If you see markets at midday, 47,786 is the level of Sensex right now. It's down about 560 points. That's over 0.25% loss for the Sensex. The similar is case for the other benchmark, Nifty 50, with over 1% kind of a loss, 153 points kind of a decline, and 14,085 is the level, trading very, very closely to the 14,000 support mark as well. Nifty Bank again has also slipped into the red and is actually underperforming the benchmark indices as well, with 0.25% or 1.5% kind of a fall over there as well, with 30,779 of the level trading at this point in time. Broader markets again down, so it's a whole red screen that I can see. We are struggling to find any kind of gainers when it comes to sectoral movers as well. 0.5% loss for mid-cap and 0.16% loss for the small-cap index as well. Moving on to the IPO update, we know that Stovecraft IPO opened for subscription on Monday. It's day 2 of the subscription, and already it's been oversubscribed by 1.54 times so far. All right, with that, it's a wrap on this edition of Market Meter. Do stay with us on Money9 for more market updates.